could be beneficial. And so please, if you have questions, put them in the chat. I do have like the slides, not a lot of slides to go through because I want this to be more about you asking questions and just having a discussion. So hopefully by the end of the evening, I'm able to give you enough information that you feel a little calmer about what you need to do next. This might be about a 30 to 45-minute session, depending on how many questions we have. All right, so welcome. My name is Ramat Oyetunji. I'm the founder of the FI Woman, and I help people with their financial planning. I also do a lot of financial education, and I have a package or a process that I call the STAR treatment. And the process for that is really about helping people do their financial planning in a way that is not stressful at all. So today's discussion, while we're here, is to talk about what's happening in the market and why it feels so chaotic, common questions everyone's asking, strategies for your 401k and long-term investments, Q&A, like I want to hear your questions and hopefully I can answer them, and then immediate actions and next steps. And Adriel, if there are any questions before I move on to the next slide, please feel free to interrupt me. So what's going on right now? There's a lot of market volatility, and what has triggered it is the tariffs. So typically the stock market will have ups and downs, but we've experienced significant volatility, and it's because of the ongoing trade wars that are happening, especially the ones that are escalating between the US and China. So that's causing a lot of uncertainty, and the stock market is reacting. Yesterday, we had an unprecedented rise in that for the first time we had like the Nasdaq rise 18% in one day, and the S&P 500 rise almost 10% in one day. And the reason for that was because the US had said that they were going to put a 90-day pause on the tariffs. So that was really exciting news. But then today, the escalation between the US and China has continued, and the stock market, it reflected in the stock market, with the stock market going down. So we've been experiencing a lot of highs and lows and ups and downs, and people are just wondering like, whoa, what's going on and what should I be doing? So now how this affects your retirement and investment accounts, a lot of people have told me that they're even afraid to open up their accounts because they don't know what they're going to see. So a lot of you might be seeing 10%, 15% drops, maybe even as much as 20% drops in your accounts, which I imagine might be a little bit concerning and scary. Which leads us to the emotional roller coaster. From the headlines to looking at your accounts and seeing a drop and wondering how that's going to impact your long-term planning. So it's a lot. Everybody is going through a lot right now with their finances. So here are some common questions on everyone's minds and some that I've received, and I hope to hear a lot of your questions as well. Should I pull my money out? So that is a very common one, with some people already taking action and liquidating all of their investments. This is not something I would advise. Everybody's situation is unique, of course, but this could potentially only be a short-term volatility that we're experiencing. So pulling out your money, unless that was your original plan, is not something I would advise. Is my 401k safe? All investments carry risk, but in terms of your 401k, the investments themselves as far as them being a little more risky right now. It's more about the overall environment and not the investments themselves. Can I still retire? So now that's a big one for a lot of people as they watch their accounts go down in value. And for each person, it will really depend on when they're planning to retire because we don't know yet how long this is going to last. Should I stop contributing? This is another big one. A lot of people are wondering, well, should I just stop until things settle? And again, my answer is no, do not stop contributing. And we're going to talk about that a little bit later. How bad will this get? We're not sure, but the feeling is that the worst of it has happened and that the market has kind of baked this in at this point, which is why we're seeing the drops not be as steep as they were previously. So, everyone's kind of hopeful that we're getting to some kind of stability soon. Is buying the dip still smart? So, whenever stocks decline, like conventional wisdom is that, hey, they're on sale, so you should buy more. And at first, people are like, this is great, I'll buy more. But then as it continues to decline, people start to wonder, well, should I even be buying the dip? Like, what's going on? Nobody really knows how. It's almost like trying to catch a falling knife, right? So if your strategy has always been that you buy the dip and you put money aside, you could dollar cost average into it. So set a goal to like invest some of your money every week or something like that. So that would be you taking advantage of buying the dip. So buying the dip is smart if it has always been your plan. So these are the common questions that I've come across. And a little later, just 2 slides down, I'll give you a chance to ask your own questions so that we can go over them. So 5 strategies for this current situation. And these are strategies that anybody can consider, explore, implement. The first one is to pause and don't panic. This could very well be a very short term situation that we're in. So, like we saw yesterday, where a lot of portfolios rose, you don't want to take action in a panic now and then miss out when the recovery happens. The second strategy is to revisit your risk. So, even though you don't want to maybe pull out of the market, but it's okay if you decide that your current asset allocation is not right and you shift into putting money into some of the safer ones. Review your asset allocation and diversification. So if right now you are in a lot of the higher risk investments like stocks, individual stocks, or even the stock ETFs, the equity ETFs, you might want to review if that still works for you and then shift your money that you're investing going forward into a different mix. You also want to make sure that you're diversified. So, a lot of people might have all of their investments in one region, let's say maybe in US stocks, but diversifying across regions helps when in a situation like this where we have so much volatility. Number 4, keep contributing. So when people talk about buying the dip or buying low, selling high, when you are constantly or within a certain frequency contributing money to your account or investing or according to your investment plan, that's you taking advantage of the dip. That's you buying low. And if it starts to rise, that's great. You're buying according to your plan and you're taking advantage when it's low. And when it rises, you can always rebalance. Then the fifth one is to stick to a plan. So while it's great to maybe take advantage while things are low, you also don't want to panic sell without a plan. So having a plan that takes into account your long-term goals will help you stay calm and not react in a panic. So now those are the 5 strategies for the current situation. They're general that anybody can apply, consider. And then for your own unique situations, you might want to dig a little deeper for what works for you.